Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, coming to you with the morning market preparation video for June 25th, 2018. So, hey everyone, I hope you all had just a fantastic weekend. I hope everyone got some rest. I know I want to say thank you to everyone. I appreciate everyone allowing me to take that day off and enjoy a long weekend with my wife, kind of celebrating my birthday. And thank you to everyone for the birthday well wishes. You guys are awesome. Thank you very much. So this morning we are looking at kind of an ugly open. Friday we had a gap up in the Dow, and it looked like the bulls might come back for just a little bit, but as the day progressed, it appeared like they were losing their ability to follow through on that gap up open. And so now we face a morning where we're gapping down significantly. In fact, wiping out the gap out, and a very good chance that we could gap close to, if not below, the Thursday low. As these trade war uncertainty threats and tweets and news reports and stuff continue to fly, it's becoming extremely challenging to trade. Now, there's a couple of questions that I wrote in this morning's blog, and if you get a chance, you might want to jump over there and read that blog. But the question is, how often does this have to happen before we realize it's time for us to step back? If you're going into the market every day feeling as if you're just fighting and you're blindfolded, you've got no weapon, is it really the market's fault, or is it your fault? At some point in time, you have to fess up to the fact that you're the one stepping into battle unprepared or without an edge. Maybe it's time to stand back a little bit. Now, this will correct, and we know it will, because there's nothing, at least at this point, wrong with the economy. Our economy is strong. Numbers are strong, and they continue to stay that way. The threat is all politically based right now. And if we just stand aside and do a little bit less trading, do a little bit more watching, be a little bit more disciplined, we'll have more capital to be able to go at the market when this finally works itself out. And who knows when that'll be? It could be 2 days from now. It could be 2 or 3 weeks from now. It could be 2 or 3 months from now. I don't know. But I just know this. If we're facing daily triple point gaps, where's your edge? And it may be time to curtail some of your trading, do a little more standing on the side. And I know that's really, really hard to do. But again, if this continues and you continue to lose money, whose fault is it if you charge blindly into the market every day, thinking that somehow today will be different than yesterday, with no proof of that in price action? So think about that as you plan your day forward, your week forward. Let's take a look at the markets here. Clearly the Dow has now rather generous here on how I put this trend line in here. We have failed that trend line. We rallied back up here to take and kiss that 50-day moving average on Friday, and now we're actually going to get a confirmation of that failure of the 50-day moving average this morning with this gap down, and possibly even an attack of the 200-day moving average here real soon on the Dow. Now, as ugly as that is, the Dow is the worst of the bunch. The SPY, unfortunately, today looks like it will gap down below the support area. We've been holding on to this support, and unfortunately looks like we're going to give that up this morning as those bears step in here and pushing us down. We could also give up this trend. So if we fail below that trend and follow through to the downside, that would be unfortunate. This is about where it looks like we're going to open. Down below that support, we could bounce right back, and that would be wonderful. The bulls step in and push us right back up. That would give us significant reason to believe there's still hope here. And I still think there's hope here. Again, fundamentals of the economy are strong. So we just have to let this uncertainty, this political uncertainty, kind of move past, and hopefully we can get past this relatively soon. There's certainly no guarantee of that. Let's take a look at the Qs. The Qs, once again, we had held up pretty darn well, holding above this support area. Now this morning we're going to gap below that area and actually put in our first lower low in this move. We've been kind of consolidating here back and forth. Even this right here was a higher low. Now we're going to put in, it looks like, a lower low on the Qs for the first time, and a real serious threat that we could challenge this uptrend in the Qs. So again, let's hope those bulls step back in right away this morning and pushing us back higher to defend that area. And IWM has been the strongest index out there, just kind of ignoring everything going on and charging higher. Well, now it looks like we're going to gap down here just a little bit. We're still holding onto this support level right here, so we'll want to keep an eye on this. If this were to fail, and here again, here's our current uptrend, and it looks like we're going to fail that current uptrend this morning, but we could drop down into here and bounce right off, and that would be fine. So we'll have to watch this pretty closely if IWM actually begins to participate in the sell-off. Might have a little bit of trouble ahead. Now let's take a look at the VIX. Oops. The VIX really hasn't kicked up a lot. We kicked up a little bit of fear last Thursday, but we gave back a little bit of that on Friday. Now this morning, with this gap down of 175 points or better, we're likely to see that fear spike back up, and we could actually threaten to break this area right here. This is resistance at this point. You can see it goes back here a long ways, and if we kick that fear above there, we could have a little bit of challenge ahead of us here. So hopefully that resistance line will hold and we'll push that fear back down. But as of now, with a 200-point gap down here, 175-point gap down this morning, it could be a little bit ugly this morning, so be careful. Let's take a look at T21.22. That 4-week new high, new low ratio. You can see we've just been swinging. Here's the effect of those daily gaps. And the thing is, there's no edge in gaps like this. When we gap up, gap down, gap up, gap down, gap up, gap down, there's no edge in here for us to trade. And what's unfortunate is they've all come overnight. So, but when we look at this chart, the only thing that you can take from this chart is the fact that we do have plenty of room in here for an upside move before we hit that bearish reversal zone up in here, and we also have plenty of room to the downside to move down before we hit the bullish reversal zone. So we're kind of in the middle of the range here. Anything is possible, and you want to think about that as you plan your day forward. And you can see how consistent this T21.22 is. It gives us really good indications of when we're overbought or oversold. And right now we're just kind of hanging around the middle. So we're neither overbought or oversold. We're just confused. We're just really uncertain, I think is the best word, is we're uncertain, and it's all circulated around that political uncertainty that's being generated from these trade wars or negotiations, whatever you want to call them, that's going on. So keep that in mind as you plan. Let's take a look at the economic calendar. We've got a busy economic calendar this week, and we're kicking it off today with the new home sales numbers. Now, consensus says the new home sales will increase today, so we'll see a little bit of a kick up in those new home sales as they remain extremely strong and showing, just another confirmation that our economy is holding up really well. And we have Chicago Fed activity here at 8, and we have the Dallas Fed manufacturing at 10:30, and then some bond auctions after that, and one bond announcement. And you can see the rest of the week we have some pretty big reports in here, so we'll have to kind of keep an eye on the economic calendar this week. But this morning, focus on that new home sales. On the earnings front, there's not much going on here. We're winding down all these quarterly earnings, and currently we're looking at 12 companies reporting today. And probably the most notable this morning would be CCL, Carnival Cruise, reporting this morning before the bell. Looks like it may have already reported and is gapping down a little bit on that news. So with that, here we are. We're facing just some uncertain times here in the market, lots of gaps and uncomfortableness for the swing trader. Now for the day trader, guys, if you're day traders, this is the day traders market. This is where you can get in there and move along with these quick moves. But for the swing trader, position trader, this is a really difficult time. And sometimes discipline dictates that you just stand aside and let some of this uncertainty kind of play out, and we get back in with our capital intact and our confidence intact when the market starts to improve. So think about that, everyone, and I hope you all have a fantastic day. I hope you all have great profits. And if this is the first time you've seen these videos, please do me a favor. Click that subscribe button on YouTube, the follow me button on Facebook. Click those thumbs up buttons and click that the thumbs up buttons and drop a comment. That's what I meant to say. Drop a comment. You guys have been really great on those. I appreciate that a lot, and I do try to respond to as many of them as possible. And also, please feel free to share this video with any friends and family. Everyone, take care. Have an awesome day, and I'll talk to you all very soon.